BitShop, the first fully privatized on-chain auction house, introducing new ways to generate liquidity for Web3 assets, backed by KuCoin Labs and Republic Capital. Bid small, win big at BitShop.io.
Good afternoon, everyone. BT Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a few minutes past 1100 UTC. Big shout out to everybody joining the stream today. I can see some good friends in the chat already and some new as well. Good morning, Hans, my friend. Yeah, coffee on the go. Let's absolutely get after it. Erica, lovely Erica. Great to see you again. MM as well. GOT, hey bud. Nipar, how are we all doing? Just made my tea. Awesome. I wonder what delights you're going for today. I'm actually nursing a little cheeky cup of green tea after smashing into quite a lot of breakfast tea this morning. Whack, my friend. What have we got going on today? Got my peach. Oh, peach green tea with black pearls. Man, that sounds incredible. I'm going to write that down. Stream on whilst at work. What an absolute dude. Trader Z8. Hello, mate. Good to see you on here as well. So, today I wanted to do a little bit of a shorter, punchier stream for you guys. And I'll tell you as for why. A lot of people have been saying to me and reaching out saying about how we kind of trade the current price action. And I think, let me just make this a full screen here, but we can really see as we look at this, right, that this thing has just been chopping in oblivion, right? I thought we were going to get some action here when we closed back within the mother bar range as we discussed, but actually when we look back here, what's happened actually consistently pretty much from back here, small deviation here of the range low, came in, attempted to make a reclaim here, but ultimately failed, got back underneath and sold off back to the lows again. Brawly, baby! Good morning, and good afternoon. Our lovely friend Brawl. Always good to see you on the stream, buddy, as it is the rest of our legendary subscribers and everyone new that's coming on the stream as well, guys. If you are new here, don't hesitate to say hi. I've got a very knowledgeable and very open-minded community here. So yeah, basically, look, we're getting rejection here. Price is selling off again. We try and get back in the range here. Price just stutters, right? And it's when you see price action like this, right? And it's just, because if you see this impulse move down, what you really want to see is you then want to see the fair value gap in here attacked, rejected, and then price to sell off lower, clearing out these lows, right? And actually, we didn't really get that. Price just kind of floundered around here, kind of took some local lows, came and took some local highs, back in for some more local lows, very local high. And then ultimately price did come down and kind of take out this area down here, which was our deviation. And then price came and kind of took all the liquidity above these highs, right? But actually, we've just been in this really, really tight, choppy range, yeah? Thank you, MM. So once again, we've done the same here, right? We've taken this high, and now price has kind of had this rejection. However, at the moment, we are kind of holding above the mother bar low, right? And I tell you why that's significant, because in these last few times that price has run this and had a rejection, or as it did here, right? Look at this huge move below the mother bar low after the rejection, yeah? That move just screams weakness, right? And even though we didn't get the kind of follow-up, the secondary move to trade lower, I mean, we got it here and it did trade lower. You would have just had to, just had absolutely iron hands to just hold that, because this thing would have just been going up and down, really looking completely without direction. But ultimately, it was pushed down to the lows here, I would imagine, to generate enough liquidity to force the market back up here, to take liquidity up here. So, the long and short of that really is it's no real different to what we do with our longer term analysis, right? But we kind of almost treating this like we would treat a daily chart now, yeah? So we're just not getting the moves at the moment on these. So I'm going to show you how I've kind of been trading it. And I've been doing a lot of Forex recently and equities as well, which have had a little bit more kind of movement in there. So it's been quite contrasting to see some of the, the parallel movements on Bitcoin. I know we've had some alts that have run pretty hot. I was looking at HBAR. That had an absolute rip this morning, almost certainly on some kind of news-based volatility. But our dear friend Pedro, Pedma7, give him a follow on Twitter, guys, if you don't already. One of the smartest guys I know. He runs like a lot of the charts, a lot of the algorithm systems and bits and pieces for us over at the Nest. And he said this morning, actually, that from a volume perspective, alts are starting to pick up. especially compared to BTC, which is very, very flat. All right. So there might be some opportunities out there in alts, but again, and this is where I really like kind of leaning on our fundamental team. Brilliant guys we've got over there, Julian and Milky, to kind of look for these opportunities that can move. Yeah, Hans there. Sushi also moved good. You're right. There's a few of them. We'll take a little look in a minute. Some of them, I think H-bar was like 17, 18% up this morning. And now, the good thing about that, and this is, I had some brilliant conversations with Pedro about this because he builds systems that buy into strength, right? They're mostly trend systems. So for him, these systems are a sign that these assets have abnormal strength, meaning that they could either be on the verge of having a good solid run, or they could be sort of starting to overheat and coming back down. I'm typically looking for the latter. It doesn't mean that I'm going to kind of blindly stick to that bias. And what I mean by that is if let's say with H-bar, for example, we've seen this big run, yeah, or like we saw with Bitcoin here. I know it's not a huge run, right? But when we saw price run up and take out a significant high as we got over here, right, then all of a sudden, you're either thinking of this in one of two ways. This is showing strength and we're above a level. We want to see continuation, in which case, then I'd really want to see this hold, right? And for price to kind of build structure above here. Yeah, and then we'd kind of look to trade above that. Or if price was to kind of come back from this level, I'd certainly want to see it finding some kind of support here, yeah, before looking for a move higher. Now, ultimately, we didn't get that. Obviously, we got a big rejection up here. And then price dropped below. We didn't get our close, and now it's searching for liquidity lower. Craig, good morning, mate. Gold on the brink of a breakdown. Yeah, yes, Hans. Yeah, that's been quite weak, actually. We can take a look at gold, actually, a little bit later. Yargo, hello, mate. Welcome. So, really, before I ramble on too much about this, what we can see is basically the market's moving from liquidity to liquidity. Now, that's always my theory. That's always how I base my view on the market. But I'm normally taking a higher time frame view, right? I'm normally starting with a daily, and I'm saying to myself, okay, where are we moving on the daily scale? Now, for people that follow the commentary will know very much, I've been very vocal. All the TA is saved every week. The reports go out every week. So there's not really anywhere to hide in that respect, right? And nor should there be. But this is what I've been wanting for quite a while. Now, we've got a big weekly fair value gap that sits over the top of this. YouTube user, hey, buddy. A big weekly fair value gap, but we've broken this down into the dailies. And this is interesting now, right? Because I'm not actually as interested in this fair value gap that's suppressing price. It's kind of been rebalanced here though, right? You obviously had the wicks through it. We've had some bodies really interact with it now as well. But when we zoom in a little bit closer, yeah, we can see here that we've got this daily fair value gap, a bullish one. So for me, when structure really isn't that clear, H-bar on the 4-hour YouTube user. Funny enough, I don't know if you were just online then, mate. We were just talking about that. Yeah, of course. We'll take a quick look at that. So we're holding this bullish fair value gap at the moment. And technically we're in bullish structure, right? Low, high, higher, low, higher, higher. But we're not really getting we're not really getting those reactions, right? And we can see how tight this is. Normally, if we lose something like this, we look for this to be retested. And then my expectation was for a sell-off deeper into this secondary fair value gap, which we didn't get. We ultimately got a rejection, pinged back, rejected again, pinged back. And now we're just kind of stuck around this mother bar low that's almost becoming like a POC. Hey, yo, Razoon, my man, my brother from another mother. What a legend, taking time out of his busy day, doing all the awesome stuff he does for the Nest to pop on. Just looking at his epic Pepe call. I think that's one of the most enjoyed calls recently. People do love a meme coin, and not many people trade them better than Razor. So yeah, really, really interesting point. Guys, if you don't follow Razoon, get yourself on Twitter and take a look at some of his stuff. Just an unbelievable trader and just uses and makes some of the sickest video content I've ever seen. But yeah, so we're a little bit flat here. So I was thinking, look, there's no point sitting here staring at the daily, waiting to try and force a narrative on the market, right? That's one of the most dangerous things you can do. You can get yourself in a real mess, holding on to that bias. So I'm just going to strip all of this away for a minute, right? So that we can just look at this. Now, we know we've got the daily fair value gap in here, which is currently supporting price. So on a daily scale, I'm actually looking bullish here. If I'm then kind of drilling that down into the 4-hour, and remember, the reason for that bullishness on the daily scale is purely because we're holding that daily fair value gap. If we see that lost, remembering that that's kind of sitting in here at the moment, if we lose that, Yeah, we inverse that, right? So see how we fail to close below it here, right? That shows that it's important for me. If we do this, however, if we purge below this, we close below this, and we start building bearish structure here, then it's my thoughts that we're first of all going to attack these lows. So it depends if they get taken out first or not. But if we inverse this, yeah, and I'd look, to be fair, we should really wait for a daily close below this, right? But to take some more aggressive plays, we could look at it on the 4 hour, and then I'd want to confirm it on a 15-minute or a 5-minute based on market structure. Yeah, you'd want to see that aggressive move. You'd want to see that move with impulse that leaves that displacement and then look to take some high probability trades. However, while we hold it, it's just really kind of sitting a little bit flat. Now, let's hide this again. So when I'm looking at a chart like this, I like to drop down to say like a 15-minute and quite often a 5-minute as well. And for this, I'm going to pop the session breaks on as well. Now, one of the things that you find whenever you're trading any asset, whether it be Forex, legacy markets, equities, crypto, is that when you get in these periods of chop, and even when you're not, one of the really key things to target are session high and lows, right? And also daily, weekly, monthly high and lows, right? So the first couple of things that I want to focus on here, and we're just going to work this back day by day. Now, I'm not a big trader, I'm not a trader at all on weekends. I don't like the amount of volume that's in the market. When the liquidity's down, the volume's low, you can get, a lot of very weird price action. So I'm going to start this on the Friday, but we can see we had a flat Saturday. I think, however, when we look at both of these, we can still say the same thing, right? Which is, if we're starting on a Saturday, the first thing that I'm looking for here is the Friday, right? I'll run this through a couple of times with you just so that we get the idea of it now. Right, we're going to do these in black. And these represent the prior day's high and low, yeah? Now, just because if we don't tag it that following day, doesn't mean that it's not still sat down there as some kind of key liquidity. So when we're doing that, we want to say to ourselves, okay, well, if that's still hanging there, we still expect there to be stops above it and below it as we run it all the way down. We can see we get our reaction down here this morning. We got that in Asia, right? So now as we're looking at this here, they still become valid. However, we're looking to trade this on Saturday and we're simply not taking them out. So what other liquidity targets do we have? Well, we've got our session highs and lows, yeah? So if we're looking here, for example, we've got the London session, which is marked out here in yellow. We have the Asia session, which trades before that. So I'm just simply looking for the highs and lows that exist before those sessions, right? That are then heading into my trading session, which is New York. So high of day and low of day, yeah? So to make life easier for yourself sometimes, you can just click on these. And then if you write in that box what you want to, for example, with this one, high of day, and then you get it set on there, you can go to your template, save it as I've got on here. So high of day, then I know immediately, right, I've got my high of day here and I've got my low of day here. Now, obviously, when you've got a really, really strong high time frame bias, you can kind of sit or rely a little bit more on that high time frame bias. So let's say, for example, we had a high time frame bearish bias here. Well, then when we're coming into the New York session, our kind of attention and focus sits to the high of day because we're thinking, right, if we're bearish overall, what do we want to see? We want to see a run, yeah, on liquidity of the highs for price to break down further, yeah? So all we're doing here is we're looking for reactions. And what reactions do we want to see? We want to see a sweep. So we get our sweep here of the high of day and also this local sweep here. What do we then want to see? Well, we want to see a change of character. Yeah. So you can call it change of character or you can call it a market structure shift. I typically call it a market structure shift, but in modern terms, most people think of it as a change of character in terms of ICT's teachings. So then, as I always ramble on about, I like to see price action developing in this leg here. So see how we had price come down. Now, for me, this is moving with purpose. It's taken out, it's changed character here, and it's ripped through, leaving these fair value gaps. Yeah, so that's what we mean by displacement. Now, as this move's come down, I'm interested in the low, which is here, to the high, which is here. Yes, if I drag this back so it actually sits over that. Right, now, when we get this high here, I then want a fair value gap that's in the red box. Yeah, that means it's in premium. And we can see that we have this fair value gap here, we have this fair value gap here, right? So they provide our best chance for our higher risk to reward setups. Now, as price continues lower, as long as my key liquidity target on the downside remains untouched, and let's not forget we've got more key liquidity targets lower down, yeah? We can look at these ones down here. Remember, we've got this untapped low here, but this ultimately extends to our next downside target. All we're doing as price action continues down, because look, drops to here, we don't get a retrace. Yeah. Now, if price had taken out my key target, target one, and then come back up, I would have cancelled this setup, right? Because my key liquidity target on the lows have been taken, meaning that we could have a change in the state of delivery, meaning we could be then looking for higher prices, and I don't want to get caught on the wrong side of that. Okay. So just to run that back, because I feel like I might have made that a bit more complex than it needed to be. We've targeted two things on this day, on this Saturday, right? Which is the prior day's high and the prior day's low. Now, when we go into here, we're now looking for the high of day and the low of day. They're our key targets. We step into our New York session, we see the high of days taken here. Then we want the market to show its hand, right? A bit of a poker term for you there, as in terms of tell us, give us an indication what it wants to do. This move here tells me we want to move lower. It tells me that price has been pushed up here, taken the liquidity, now it's running. We've got our change of character, right? So what I've done here is I've overlaid my premium discount range, yeah, which is just a simple Fibonacci split between the split on the 50 line and then the top coloured red and the bottom coloured green, showing us that when we make an allowance for that, we're favouring long setups from the bottom half and short setups from the top. Now, we set this here, we don't retrace, no problem. We then set this low, no problem. We just drop our low to here. When we close this white candle, we expect price to move up. Does it move into our red box? It doesn't. We then get another move lower, yeah? But we're still fine with this move. Why? Because we've still got our key low intact. If we retrace up to here, we're still going to have good risk to reward, right? It looks close, but actually we can ping up here and still have a really good trade. So what have we got? Where's our complete fair value gap that sits here? Right now, we've got two adjoined here. So we always want to favor the one that's deeper. Yeah, if we had one fair value gap here, so there wasn't one in this upper one, we only had this, I would just make an allowance for that part of the fair value gap that sat in premium. All right. But because we have this one, a clean fair value gap here, our belief is that price will draw towards that to rebalance. However, one thing that makes this a little bit trickier is that we have this fair value gap up here, right? Now, for anybody that's really struggling to spot these or really kind of new to it, grab yourself this indicator, right? I'm sure there's others as well. I don't have any affiliation with this person, but it seems to be a really good indicator. Fractal break imbalance, fair value gap, right? And then if you put this bad boy on, it will just spot all of your fair value gaps for you. All right. Obviously, the lower the time frame, the more of them there are, which is why you want the context. So we've got our higher fair value gap here, meaning that we can do one of a couple of things with this order. Now, our conviction is that price is trading lower towards the low of day. Yeah. So, and ultimately towards the prior day's low, which is the black line further down here. Yeah. So all we're doing here, we're saying, okay, price has drawn up into here. This is our initial order. Yeah, so once we set this fair value gap and we set this, I've already got my limit order on the lower line of this fair value gap. Now I have to make an allowance here. My minimum can go above the actual FVG here, that candle. Yeah, technically to be a little bit safer, you probably want to put it above the swing high and add a few points on as well, because crypto can just have a little bit of that extra volatility. Lord Tang, my friend, old friend. Good to see you, buddy. And Arno Kalkman, welcome. So let's look at what we've got here. If we're lining this up, have we got at least a 1.5? Yeah, so we've got a 1.5 down to here. When we have that, we can then start to pick liquidity targets lower down, looking at key lows. Yeah, You can even take these as they're adjoined. You can look at this one. Ultimately, in an ideal world, we want to hold it down here for the prior day's low. Now, for me, because this is then trading through a session and into another session, if I left this ready to trigger, I would have probably looked to have closed this out at low of day because I wouldn't have wanted to manage this so late into the evening. But hopefully that principle makes sense in terms of how we're looking at that. So let's just run through a couple more. Yeah. So let's go back, just for example, let's go back to here, right? Let's look at Thursday's trading. Yeah. So we want to trade Friday and we're looking at what's happened on Thursday. Yeah. So lo and behold, Wednesday's low. Yeah. Prior day's low. Should we mark up on here with our PDL? Get swept here and we'd be looking for long positions, right? Now, we've got the prior day's high, which we can see as well, that we didn't come anywhere near threatening, so we don't need to worry about that. So that would have been our setup for Thursday. So that was our setup for Thursday. This was our setup for Saturday. Our setup for Friday is going to be the same here, right? We're going to take prior day's low, and we're going to take the prior day's high, right? Now, we're not going to worry so much about drawing that one in here because we know we didn't hit it right, but we have the power of hindsight. What we want to do is get ourselves into the habit that when we're starting to look at these, we label everything up. So this is when we're coming into the day fresh, yeah? We're looking at what's happened in Asia, right? So remember, what's our next set? Our next set is this. What are the session lows? So Asia's lows in here, London's lows in here. That's the ultimate low, yeah? Which we run to here. So that's our low of day. All of a sudden, we've got a nice bit of confluence there, right? A low of day and prior day's low, I'll just move this back just a nudge, are aligned with one another. However, we also get another opportunity in here because we get our high of day, right? Now, remember, if we have high conviction, yeah, meaning that if we have a high time frame bias here, and let's say, for example, that bias is bearish, then this would be the trade we would want to engage with, right? If our bias was bullish, we would be looking for price to sweep the lows. However, if we're neutral or we're looking to trade this on a lower time frame, quite simply, we can still trade both as long as we get the setup. Now, for me, right, while we're on a 15-minute chart here, you know, I personally like trading these on like a 1-2 minute time frame, right? But I appreciate that's a little bit low time frame for most people. So even if we drop this to a 5 minute, here we go, just make that a little bit bigger for you guys, one moment. So now as we drop to a 5 minute, what were we looking for? Yeah, remember we were looking for the same thing. We need that sweep. We've taken liquidity above the high of day, right? Then we need our change of character, right? Which we get here. So that's our market structure. So this is actually technically a market structure break because we're coming from a lower high, right? Now, we also get this impulse move lower, yeah? What does that do? It leaves a fair value gap, which as we discussed before, is what we want to target. Yeah, so that fair value gap here, we look for price to trade up towards this. Then look, we didn't take out low of day and we didn't take out the prior day's low. Yeah, so we've got to say to ourselves here, okay, well, if our entry comes at the very beginning of this fair value gap and the lowest our stops can go, because we've not got a fair value gap above, so we can place our stop a few pips above the fair value gap candle, right? So if we're there, we would place that here. Now, we need to take this down to low of day and realize we've only got a 1.25 risk to reward, right? Now, for me, I like this to be at least a 1.5. Yeah, sometimes a 1.4 if we've got strong conviction. Now, this at 1.76 for prior day's low, I've then got to make an assessment and say to myself, okay, what's the likelihood for me that we hit prior day's low over low of day? We've had quite flat price action coming into this. The truth is, I just don't know, right? So I would trade this, but I would probably reduce my position size. Yeah, so I'd go half a position size. So say my normal risk to reward that I'm putting out there is 2% of my account, I'd probably drop this to 1%. Yeah, it's not a particularly great risk to reward. We're not sure if price is going to reverse here or here. So what I would do is when price reached the low of day, I would move my stop loss to entry. Yeah, possibly skim a little bit of profit just to cover the fees on the position, right? And then from there, price can continue down. So what we don't want to do, and I'm just going to get rid of this for a moment, because remember, like I said, we don't actually have the strongest conviction in the world here, right? We don't. That's the truth. Price is chopping, we're range bound. So what we're looking for is aggressive, quick moves from liquidity to liquidity. So we've just traded the high to the low. Well, now we've just run low of day and prior day's low. So what are we looking for here? We're still in our New York trading session. We want to remember what we're looking for is a change of character or a break of structure, which we get here. Yeah. Why? High, higher, low. Higher, high. Okay, what else do we want to see when we see that, right? We want to see displacement. We need to see that fair value gap here, right? All of a sudden, it's like, okay. We can see that we've got momentum. We've got a liquidity target higher up. So if we measure this leg, like we did before, now we want the fair value gap, right? That's down in discount this time. So we adjust our fair value gap to the green box because we don't have two, remember, like we compensated for last time. So we'll drag this back over here just to leave it as a symbol. So we've got all of our conditions. We've run the low of day or the prior day's low. In this case, we've run both. We're now looking for a bullish recovery. Another thing that's an indication of that is look at this beautiful upside wick. Downside wick, sorry, price comes down, it's bored up very quickly and has quite an immediate reaction, like a V-shaped recovery. That's normally quite a bullish sign. So then we're saying, okay, it's still too risky to enter at this point. What do we want to do? We wait for our change, yeah? So we get our shift in market structure here. Here's our displacement. We adjust it to allow for our fair value gap. We adjust our fair value gap to allow for our premium discount. So we want to be taking this from down here in discount. So ultimately, we're on a 5-minute chart. What do we need to do? Bearing in mind, this wouldn't have played out at this point. We would have been tagged into our trade here. Here's the low, right? Just a couple of pips below it. I think you probably would have got away with it even if you'd chosen this low. But what I would say is if you ever see a couple of lows together like that, just think logically, right? What's clear and obvious? If you were looking for a stop hunt, would you come after people that were being a bit cocky there? I think I would. So always a few points below. You can see you get a bit of breathing room here. Please make sure to make an allowance for the bloody spread if you're doing this on traditional markets, right? Very different to crypto. And then we need to say to ourselves, okay, where's our low-hanging fruit? So our first target is here, this high. Yeah. So as soon as price gets there, we can adjust our stops to entry, trim a little bit of profit in order to cover our fees. But ultimately, we've got our ready-made target, which is up here. Now that's a 5.7R trade. Do we necessarily expect to get there? No, but we don't have to, right? That's target one. We can make adjustments then to secure our risk. I'd also be interested in what happens when we get to any targets like this, clean highs where you see a long upside wick. And all we would then look to do, we would do the same with this one as well, but it's quite close to this. We would then just see how price starts to play out. Oh, it's pinged us through to there. So let's just flick this off a replay for a second anyway, and we'll just go back to it, see what happened. Hang on a minute while it just catches up with itself. So what did we get? We got a gritty grind, right? Which we can see here. So we came in, we tagged ourselves into here, we adjusted our stop loss to entry here, so our stop loss then comes down to here, which doesn't get tagged out for quite a while. We don't quite get up to our secondary target up here, but price is secured, and we can see the kind of point of what we're looking for, right? Ultimately, price lost momentum here. We stepped into the following day's trading, as we highlighted here. We highlighted the high of day and the low of day. Ultimately, then the prior day's high and prior day's low. We can see price ran the low. We're now in this recovery phase, and we're now looking towards here, which we can see has just currently been run. Yeah, which was the high from the New York session. Also, prior day's high here. We could see that we had prior day's low here as well. But if we come into one of these targets, right, and we see, for example, we got the prior day's low here, and we're continuing bearish structure through it, then our assumption is that we're heading for liquidity lower until we see one of these recovery plays. All right. So at the moment, that's my real kind of focus on BTC. So as we're looking at it here, and it's the same. It's the same across the board. The difference is that if I had a really solid conviction of bias, yeah, then what I'd be looking at is to say, okay, let's stick with the bias. We want to always trade with our higher time frame trend. However, when it's unclear, typically prices chopping around, very similar to what we would do with ranges. We can just see how they ping about between the two of them. Tataloob, apologies if I've absolutely murdered saying your name then. Awesome name, love the profile picture. Yeah, sure. Do you know what? Actually, we normally don't do requests on a Monday, mate, but I tell you what, we will have a quick look at BLZ DT. Very nice of you to ask so politely. Thank you very much. And we'll just take a quick look at HBAR as well, because I know a couple of people asked about that. And we'll just overlay these exact principles onto those, right? So we've now got two completely different assets, and I'm not sure I've ever actually traded BLZ. So let's have a look at it on here. And give us a really good chance to just run a really, really quick top down, help stay fresh. We can keep it punchy, and then we'll also look at what these kind of liquidity setups would have been recently, but also what they're going to be moving forward. You know, not just taking hindsight data, but kind of looking at this and saying to ourselves, okay, well, actually, what is, what are the setups that we can go away and look to trade this week? Thank you, Hans, you legend. Yeah, do hit the like button, guys, if you are enjoying the content. Really does help the channel out. Right, okay, so now when we look at this on a daily, we can see that we've got kind of like a similar situation to what we had with, was it Yosef last week was asking about one FSS or something like that had this big rip as well. Right now, for me personally, I'm in the market of looking to short these rips. Yeah. Craig, Wi-Fi dropped when I heard you say gritty grind. The last few weeks have really felt like that. Yeah, they have, mate. They really have. Which is why today I want to kind of focus on that lower time frame liquidity. Again, don't go out and just try these things just with your account and stuff like that, guys. Try some demo account, back test the living heck out of this. See if you find these little fun, kind of funky intraday setups. I'm not sure why trading. Oh no, it's back online, I think. And go and give it a go. If you are going to trade it, once you've really, really practiced it, just do so with a really, really, really small account. Yeah. And then, the more and more that you get proficient with it, the more you're happy with it, you have your tested results, that's when you can kind of look to kind of move on and then start making some real allocations. But until then, there's just no point making the risk. So we've taken this key high up here, right? Wow, this thing has just run so hot, right? To really break this down in the most basic way, for the way that I'm seeing this, and this is purely for my own thought process here, is we've got this 4-hour fair value gap, right? So let's just label that up. Now, let's lock that. Now, what we can see here, as we were just discussing, we've got the prior day's high here. Right, let me click on that, there we go. Prior day's high, and then we've got our prior day, not our prior day's low, is miles down here, isn't it? So we can just see how big these ranges are being created. Right now, for me, I'd feel a lot better. Well, I'll show you exactly what we'll do with this, actually. Prior day high, prior day lows marked up. H4 fair value gap is here. The premium discount to our range is here, meaning that we're favouring short setups while we're in the red, potentially long setups when we're in the green. Now, if we inverse this fair value gap, right, meaning that we come down, close below it, yeah, so all we need is a close below it. We look on the lower time frames for a retrace, and then price to raise to attack liquidity on the lows, yeah? Daily FEG on this coin from 3rd of March. Yeah, okay, good shout, MM. Yeah, and we're coming into that key high as well, right? So I do think that we could just see a little bit of resistance here. Plus, this thing has just run really, really hot, hasn't it? So that's the kind of play that I'd be looking for there. Yeah. I think in an ideal world, if we run this higher, then, like I said before, I'd look to trade this into the New York session. I'd want to see this higher run. Then I'd be looking for breakdown plays. All right, in here, looking for the fair value gaps in this displacement leg. As we drop this down a little lower, the other thing that we can look are our session highs and lows, right? And something to consider here is we're still setting this, but we're not far off now, starting the New York session, which for me, I'm looking to actively trade this from 1:30 BST, which is 12:30 UTC. Then this can be of interest. If this continues this run through into here, then we've got these highs that have just been taken. Doesn't look like we're having the most bearish reaction for that at the moment. And that we know that our session lows are here. So this is really interesting, actually. So this is our low of day. So if we were looking for bullish continuation here, and the truth is we have to kind of retain a bullish bias here because price action is moving so bullishly. However, we also want to be really, really cautious that this thing has had a kind of abnormally strong pump over the last few days. So, the high probability trade setups could very well be to the downside. So this is why it makes sense to break this down onto lower time frames and then kind of scope out where our liquidity is. So what would be a brilliant setup here as we move into New York would be something like this, right? Would be for price to reject and come back down, find support at this H4 fair value gap, run the low of day. Then if we get that recovery we were just talking about, then make an attack on the previous day's high. The reverse of that is within the New York session, if price just gains continuation, takes out yesterday's high, then I'd ultimately be looking for that moving the other way. All right, so does that make sense, guys? Yeah, so what we can do is we can just break this down. We can look at our liquidity based on high of day, low of day, prior day's high, prior day's low, right? And while we haven't set this at the moment, so we have to be aware that by the time we get into New York in an hour's time, this might be up here, in which case then if we get this here, just delete that so it becomes a little bit more clear, then we might not need to run this high. We might just be running the session high. And sometimes with these moves, it's better to kind of not overthink it and just trade the chart, rather than kind of trying to hold to your bias and you wait for this to come up here, and by that time you've missed a really nice move going lower. One of the key things to remember is that we don't know if we're going to be right here or not. We're playing a game of probabilities, but that game of probabilities unfortunately doesn't work unless we take our trades with conviction. And what I mean by that is if we don't run this higher, but I get my setup after we take the high of day, then I'm trading it lower, right? If we take the low of day, and we get our setup for a long, then I'm trading it higher. Neither of them could work, but over time, I know that my risk to reward and my win ratio on a tested system is enough that it will pan out over the weeks and months as we look to kind of build ourselves and our kind of portfolio over the year. So that's where we are with BLZ. Let me just have a look. Ahmet, my friend, welcome to the stream. Actually, as soon as this stream finishes, mate, we are going to... this will be available on YouTube. You can watch the recording. We actually started today with a nice in-depth analysis on BTC. So take a look at that and don't hesitate to reach out to me via the Nest or also just on Twitter if you want to as well, if you've got any questions. All right, bud? And we're going to take a quick look at HBAR as well, right, for YouTube users. So let's go through the same process, Let's grab HBAR up. So if we were looking at this on a higher time frame, then when we think about it like that, we would be looking at like we're looking at our kind of 4-hour or hourly or 15-minute chart even at the moment. If we had higher time frame trending and swing plays available to us, that's how we could look at that, right? So, Ahmet, okay, thank you. You're welcome, mate. Which method do you use to change the price? Yeah, for me, it's just purely price action. I do factor in news, particularly heavily towards Forex markets because it's so heavily news driven. But yes, my friend, it is very much kind of price action, looking for how price is moving from liquidity to liquidity. So with HBAR, right, we can see here on the 15-minute. Now, we need to zoom out a little bit from here. The first thing that we can notice is, let me hide these. So this is basically like a high time frame pivot point. So this is fairly significant that price has kind of got above that. But it just goes to show you that you don't really need to always factor these things in here. What I don't want them to do is to become a confusion, right? So let's just, as we have done, just stick with just key and core price action. Yeah. Now, actually, I think we were discussing this trade, or I shared this trade maybe Saturday. So exactly the same principle, right? Here was our prior day's high. Yeah. Here was our prior day's low. Now we ran the prior day's low in London session, so I didn't take the trade. But when we ran the prior day's high here, yeah. So let me just draw that in for anyone that maybe doesn't fully get that. Well, actually, high of day was probably here. Yeah, so here's our prior day high. We can see we just snuck that. You can see we weren't quite in the New York session there, right? We just kind of snuck into it here. But we come down, we get our change of character, we actually get our structure break here, we get our fair value gap here, which we just, when I really zoom in, you can see, obviously this was taken on an M5, right? But you see this little wick that just snuck up into this. This was an M5 fair value gap. And then ultimately we're just targeting the liquidity below this low and ultimately lower down. So it's exactly the same thing that we're looking for at the moment. Now, although we didn't quite, it would have been lovely to have swept Saturday's low. This is one of the things I'm not a big fan of on trading weekends, right, in terms of the volume of volatility. However, anyone that managed to get involved in this move must have woken up a very, very happy bunny. So one of the things that we've got here, we just need to zoom out a little bit because we can see that we've not really got many prior days highs and lows before us. We've also, now if I ever want to see if I think that we're going to get a reaction at a level on any time frame, then one of the good things to do is if you just continue that level across, yeah, really I would want to see a wick come up and I'd want to see it close below this level. That would give me more conviction that price was going to move lower, right? However, when we close above this, we hold this level here, you can see, then actually it looks to me like it's holding a bullish structure. Well, it doesn't look to me, it is holding a bullish structure, all right? You can then zoom back even further and further, trying to find any point of significance. And I would say at the moment, kind of looking at this. Yeah. So actually we can see how uncannily price stopped exactly there, literally to the dollar, right? So that high has now been run. Now price is kind of battling to get back above this. So what I would say in all truth is very, very difficult to get into a position here at the moment. So if I take you back to this very quickly on the 4 hour, one thing I would be looking for, is this 4 hour fair value gap here. Because I do think that, we can reject here. That's going to be the magnet for price. Yeah. So if we start piecing those bits together, as we start moving towards our session, I'm just going to delete that so that's a bit cleaner. Then as we start to move into New York, we can see that we've got these highs here that were set in London, and then obviously the ones in Asia were swept here. So this is the high I'm interested in, right? Our high of day. So once again, run past it. I'm just going to mark that up. So what would I like to see here? So what I'd like to see here is price run this, yeah? Get our change of character, retrace, target one, and ultimately down deeper into this fair value gap. Now that might look like a load of rubbish at the moment, but what I'm basing that on here, is that we want our change of character, so we can do that little micro low if you want that. Technically from a fractal perspective would be a more accurate position to have that, and you can label them up. I used to call them market structure shifts. They're known as change of characters as well here. But this is, imagine we get this move below here, the move that shifts market structure with displacement, meaning that within here we need a fair value gap that's in premium, so we would mark out our discount premium leg. So our entry would go in here. So if that was our fair value gap, just say, for example, and this was the part of it that was in premium, I would adjust it so that it falls within the red box. And let's just say, for example, that was our swing high. We'd always go a few points above it. We want to know that target 1, yeah? So where did we say we're looking to run to these lows here? We've got a nice 2R trade, ultimately then looking to trade that lower down to here. Yeah, does that make sense? So that's where we're kind of looking across there. Is DXY agreeing probably favor? Yeah, agree probably favor bearish. Yeah, let's definitely take a look. Let's definitely take a look at that as well. And Whack, I see you had a question there, mate. Hi, mate. When trading this strategy, I'm assuming it's best to get the initial setup in Asia, as that's the start of the session, and then work towards London and then New York. So for me, because I very rarely actually even trade London. I do a little bit more with FX, yeah, because I think that it kind of has more of an effect for me, certainly my kind of triggers and setups in London. But what I'm actually looking to do is I'm actually looking for the Asia session, yeah, and the London session. So if I was to draw, say, a big box over it, yeah, from say from midnight even through, and then at 1:30 when I'm looking to trade the New York session, yeah, what I'm doing is that's what I'm basing my box on, yeah. So if we do that in, I don't know, whatever color, do it in teal, for example, yeah, that's my session lows and my session highs. They become the levels that I'm looking for liquidity to run, combined with prior day high and prior day low as well. All right. So we can see here, we've got all this liquidity building up above here. If I was, larger accounts, I'd like to flush this out, reverse it down, make some money, and then allow price to settle. Remember, yeah, that even though we're looking to potentially short this on a lower time frame, it's kind of a counter trend trade, and that as soon as we zoom out, which is why it's always important to have your high time frame context, yeah, we can see that that short that we're looking at could be a short that's just looking to set up a higher time frame long, meaning that when price starts to get into here and we've got our premium discount of this leg and we're down in discount, that's when we can start looking for long setups to start attacking liquidity above the highs. All right. So I hope that's been useful, guys. I'm just going to take a really quick look at DXY as well. Because as Craig points out, it's really, really important to kind of keep an eye on that. Now, I know there's not been a particularly strong correlation between that and Bitcoin and crypto in general at the moment. But it is always worth keeping an eye on, right? Because typically, and this does relate heavily to traditional markets, but also crypto, is the stronger the DXY, which is the dollar index, the dollar measured against a basket of other currencies that's heavily weighted towards the euro, or heavier weighted towards the euro. When we get these pumps, yeah, strength in the DXY normally relates to weakness in risk assets, yeah? So we can see on the DXY today on a 4-hour scale, we've had a marginal pullback. If we go on to something like the NASDAQ, we would have expected the NASDAQ to have a little bit of a pump in the same point, yeah? So again, very basic, but it does always make sense to have kind of one eye on that. Also, I do trade them anyway, but I do like looking at NASDAQ as well and ES when we're looking at Bitcoin. However, that correlation has been all over the place lately. Oh, Kelly, my lovely, so late. Hey, BC. Hey, fam. I have to rewatch from the beginning. Yeah, we're just literally getting ready to close the stream up, actually, Kelly, as always, and it's brilliant to see you on here. Kelly, for people that don't know, is a lovely friend of the shows who tunes in all the way from New Zealand. If you've got any questions, Kelly, ping me through the nest, ping me out on Twitter, and we can look to cover those bits and pieces off. But as I'm sat today, the other one thing I wanted to bring up as well is please do be aware of any news events this week. I think we've got some FOMC minutes tomorrow, but apart from that, I think it's a relatively quiet week. So especially if you've got an eye on traditional markets, then please do make to have a look at that. Have I missed anything else? Oh, Amit, apologies. From which time frame counts change of structure or change of character or break of structure? 5 minutes, you see it all the time. Yeah, no, you absolutely do. You're right. So if we look at this very quickly on the NASDAQ chart, which we're on the 5 minute at the moment, for me, you get these kind of change of characters, you get these bits and pieces here, there, and everywhere, right? So the important thing for me is that we're aligning them with context, yeah? So when we ran this liquidity here, the reason that I was long here on NASDAQ, yeah, trading up to the close of the fair value gap, because overall the high time frame bias was still bearish, so looking to just do a counter trend trade. Why? Because we took liquidity. Secondly, because this here was where we got our change of character, yeah? And did we get an impulse move with a fair value gap? We absolutely did. So for me, I'm then looking at this area here on a 1 minute chart, to get my setup, which I then get from this little green box in here, right? If I'm just seeing a change of character, let's say, for example, you saw this high get taken, would I attribute so much to it? No, I wouldn't, because I'd be looking for key liquidity targets. That's high of day, low of day, prior day's high, prior day low, and then you can branch. That's a really, really good place to start. And then from there, you're looking at weekly open, monthly open, those kind of areas. Basically, where is the clear and obvious liquidity resting? Yeah, that's the question that I'm looking to ask myself. All right. So I hope that's been helpful, guys. It was really, really good to see you all. Really pumped for this week ahead, doing a lot with FX. Going to try and really get some good crypto trades out and share them with you guys as well. And yeah, we're going to be back on Wednesday. We've got Alt Request Wednesday, so we'll take a look at a load of different charts as well. And guys, if you do go away and you're looking at any of these concepts and you do have questions, don't hesitate to reach out or let me know on Wednesday, and we can look to cover it on the stream then as well. All right. So apart from that, guys, just wishing you all an amazing week. I see some of you around the nest. Any of it, those of you that aren't with us at the moment but are interested, you can join for free and come in on a trial, see what we're all about. You can get access to our calls for a very minimal sign up with our partner over at Bybit. And just pop along, see if it's something for you or not. And if not, you can always reach out to me on Twitter. All right. Everybody, thank you so much. It's been so lovely to see you all. And really looking forward to seeing you all again on Wednesday. Trade safe. I'll see you soon.